Good afternoon, good morning, good evening, everyone. Welcome to Exchange Rates UK TV. Today we're going to look at the pound dollar, GBP, USD, the cable, whatever one you want to call it. This one causes a lot of people's accounts to go sky high or collapse. So we've got a lot of stuff going on. One of the things you're really never going to hear me talk about is fundamentals, because in technical analysis, fundamentals are one of those things that just does not matter to us. We don't, and I know that sounds kind of antithetical in foreign currencies, but it really does not matter, to at least in my trading and my analysis for my clients and my own personal trading. It does not matter. So one of the things I want to point out here is that you have these price action activities and behaviors that reach these extremes and are outside of equilibrium. They correct regardless of any kind of bullish or bearish news or outlook by analysts or central banks. On the daily chart, it's fairly. There's evidence, at least with the Ichimoku system, that things might be consolidating for a while. If the lagging span over the next, how many days? If the lagging span over the next 23 days or 23 calendar days or 16 trading days, if it starts to get inside the candlesticks, that's a sign of one of consolidation, but the second is that it's a sign that we could see either a major corrective move occur on a higher time frame, or we could see it just consolidate to resume higher. Looking at the oscillators for the daily chart for the pound dollar, a very flat looking RSI. We're in between 59 and 50. So this is very indicative of that consolidation. We also see the composite index, and at least from the perspective of these oscillators, they're very similar to what we saw on the daily chart with yesterday's video on the euro pound. And then also the percent B is certainly not. It's closer to the upper bounds, but otherwise it's sitting here in the middle. So very directionless, even though yesterday we did see some really nice bullish behavior price action-wise. But volume-wise, take a look. Over the last few days, and volume in Forex is also one of those things where it's it's hard to gauge whether it's very important or not. This is Oanda's data. They have pretty good, reliable volume measurements, but the volume level has been going down, and we saw yesterday price shoot up quite a bit. But there's really nothing clear here on the daily. So let's take a look at the weekly chart. Weekly chart gives us a little bit more of a view. Now, what I see here on the weekly chart with the pound dollar is something that my analysis on the dollar index I did last week is showing me. It is showing me some inherent weakness in the current move here. So we're currently at 62. All right. So we're not overbought. We're not oversold. But we are flattening out on the weekly RSI. The other thing is this right here. There is a Kumo twist. It's hard to place it right there because TradingView wants to put it on an exact week. But either between this Wednesday and next Wednesday, the price is going to intercept the Kumo twist. And the Kumo twist, this was an odd behavior of the Ichimoku system, but the Kumo twist is one of these things where, if you see price action has been trending for quite a while, the Kumo twist the date of that can actually indicate the top or the bottom of that move. Now, we're not talking about a major trend reversal, but we are looking at a corrective move here, at least on the weekly chart. And generally what happens is price will come down to test the Kijun-sen. Price has not tested the Kijun-sen in the last test we had was back on the week of September 28th, 2020. So it's been 15 weeks or 105 days since price has tested the Kijun-sen on the weekly chart, which is a pretty good amount of time. It's not overly extended from the Kijun-sen. There is a max mean value that things will move from the Kijun-sen. Currently, it's only 519 pips above it. That it's not even really halfway to where the max mean is at. So we could just see it flatten out, but certainly, on the weekly chart, we see things showing evidence that things are topping out. Pay attention to the composite index, though. This guy right here. When the composite index, the red line, crosses below one of its averages here, I call this a pinch. That's just something I came up with. I call it the pinch. It's when the composite index, its fast moving average, and its slow moving average are converging kind of on top of one another. Here was a pinch back here. This was one. Oftentimes when you see the composite index line, its fast and slow moving average, all three kind of in the relative same space, whichever direction the composite index is going to cross down above or below, that is the direction that it's going to take, that price action is going to take, and that is kind of the it's a fairly dramatic move. There is divergence that exists here. There is regular bearish divergence that exists between the composite index and the RSI. And I want to point that out real quick because we have seen some evidence of that correction occurring. Now, I'm not a huge fan of divergence that exists at extremes, and this is not at an extreme. Ideally, you would catch these divergence levels closer to level 50. But in the meantime, we do have a series of higher highs that have generated on the RSI compared to the lower highs in the composite index. So on the weekly chart, this is showing that we could see a resumption of trading of the pound dollar moving south. A monthly chart, I don't know how much this is going to tell us, but on the monthly chart, I mean, this is a condition you never really want to see on a high time frame like the monthly chart is. You don't want to see price action inside the cloud. The cloud is a miserable, dismal place to be. The cloud represents volatility. It represents inactivity. It represents indecision. It represents chaos. I affectionately call the cloud the place where trading accounts go to die. So when we're looking at price inside the cloud here on the monthly chart, expect some noisy trading here. Expect some whipsaws higher and lower until there's a clear break of the pound dollar outside of the cloud in one direction or the other. We should anticipate some really noisy price action here. The monthly chart does show us something pretty bullish though. And this has only existed over the last 3 months. And that is where the lagging span is at. And so the lagging span, let me make these a little smaller here. The lagging span is what's called open space. In Manesh Patel's Ichimoku book, he discovered a behavior, something that he coined as open space, and that's when the lagging span is if you're going to trade higher, if prices are moving up, you want to see the lagging span above the candlesticks, and basically you look forward 5 to 10 candles. If it's not going to intercept any candles over the next 5 to 10 periods, then it is in what's called open space, meaning that there's very little resistance for prices to move higher here. However, the lagging span does respond to the same Ichimoku levels that price does. So it seems a little weird, but the lagging span is currently up against a pretty strong resistance level on the monthly chart. See how it's sitting right on the bottom of the cloud. So don't be surprised on the monthly chart to see price dip. I mean, and it would probably find support up against the bottom of the cloud. So certainly looking at 132.50 as a near-term support level based on the monthly chart, that would be what I'd be looking at. But otherwise, when I see this in the monthly chart, this is a pair I don't trade. I don't even really like to look at it because It's just not a good idea to trade any foreign currency, any instrument, when on a monthly chart it's been sitting inside the cloud. It's just not a fun place to be. So thank you for watching this video, and from all of us here at Exchange Rates UK TV, please do not forget to subscribe and like, and I look forward to speaking with you in our future videos.